Before we talk about selling options or weekly options, we have to first understand some of an important concept with options and how it affects which options expiration you choose. And that's the Greek theta, or what we typically refer to as time decay. Now, delta and theta are by far the two most important Greeks. So if you're not familiar with Greeks and you need some time to review, I definitely encourage you to take some time to review delta and theta. For this particular purpose, we're going to talk about theta first because theta it represents the change in the value of an option with respect to time. Now, as an option seller, what you want is the value of the option to decrease as it approaches expiration, because you want to sell an option for a specific premium and you're hoping that by expiration that premium evaporates to zero and you keep 100% of what you've collected or what you've sold the option for. So what theta tells you is how fast is the value of that option going to decay with respect to time. So for every 1 day that goes by, how much of that option value will decay with time. And the time decay factor, the theta time decay factor tells you that the intrinsic value of an option will decay faster as it gets closer to expiration. So what that means is that if you hold a 1 month option, the first few days, it's not going to decrease by much in terms of value. But as you get closer and closer to expiration, if all other things are kept constant, each day that goes by, the value of the option will evaporate slightly faster as the day goes on. So as you get to the last few days of options expiration, the decay starts to get really fast. And that's why a lot of traders have a preference for selling what we call shorter dated options. So options that expire in 1 week or even in a day or 2 days, those options will expire, or the income that you collect per day is going to be faster than if you sell a 1 month option. So theoretically speaking, you will collect more income if you sell 4 weekly options than you do if you sell 1 monthly option. So even though the time frame is the same, if you break it up into selling 4 weekly options, you will collect theoretically more income, or actually, practically you will capture more income selling 4 weekly options versus 1 monthly option. Okay. Before we move on, does that make sense, everyone? Please type 1 into the chat window if that makes sense to you. Time decay accelerates as you get closer to expiration, which is why traders have a preference. If ever for traders that are selling options, they prefer to sell shorter dated options. But it's important to understand there's a trade-off for this, right? And this is really what I think a lot of traders that don't have a lot of experience tend to overlook, because when you sell shorter dated options, what you get is less income per trade. You may get more income over the long run, meaning if you do actually manage to sell 4 weekly options versus selling 1 monthly option, but each individual trade, you're going to get less income. And that's important to understand, because in order to generate the more income, you have to sell 4 weekly options. Now, that means that you have 4 opportunities to potentially be assigned on that short call or short put or whatever strategy that you're selling. So what you're doing is you're substantially increasing your exercise risk by selling shorter dated options versus longer dated options. That's one major trade-off that you have. So yes, you can potentially make more money in the long run, but you're adding a lot more risk along the way. The second thing is you also have significantly higher, you're increasing your transaction costs. It's, these days in zero commissions, the fees and commissions is less so of a concern, but bid-ask spreads of having to sell options 4 times, you're paying the bid-ask spread 4 times versus paying it only once when you're selling a monthly option. So you are increasing your transaction cost by 4 times the amount, and that will add up over time. So there is a diminishing return as you go slow, as you get closer and closer to expiration, because theoretically you can take that concept and sell 0 days to expiration options, which is something we'll talk here later this month about, when you go to the really extreme end of the curve, when you sell 1 day options, what does that look like? But it's important to understand that, yes, theoretically, you get more income by selling shorter dated options, but there are some substantial trade-offs for that. Does that make sense? Please type 2 into the chat window if that makes sense to you. So this week, what we're going to do is we're going to talk about a bit of a sweet spot, selling weekly options, right? So, we all understand selling monthly, the shorter you go, the higher income that you get per day, but we're not going to go to the extreme end of the curve. We're not going to go to 0 days to expiration. We're going to talk about that next week and the following week. This week, we're going to talk about selling weekly options. And I think this is a really good sweet spot for the vast majority of traders, especially if you're relatively new to options trading or options selling. Selling weekly options can be a good sweet spot, even though I think that for everyone, monthly options is the best starting point. Once you get a little bit of experience trading options, especially if you have the ability to trade options more frequently, weekly options provide you a little bit of a sweet spot.